Good day everyone and welcome to Admiral Markets webinar. Today is 28th of September 2016. My name is Nenad and we will see account management today. How to actually try to escape from losing trades and drawdown. Drawdown and account management is something that we are always and that we will always see and experience in our trading careers. But it's very important that we understand the concept of drawdown and how we can actually escape that negative spiral and how to avoid to be sucked into that negative spiral of losing. Well, there are different techniques that we will talk about today, such as averaging down, retracement, slow reboot, fast reboot, compounding. So there are some techniques that might help you to actually escape a big drawdown and to return back to be profitable. Now, this is my experience. Maybe some traders also have different experience with managing drawdown. I will talk strictly from my perspective because I think that drawdown and managing drawdown is especially in today's markets, it's very, very important. Simply put, drawdown for some people can be the worst enemy. For some people, it's expectable. So we definitely need to know how to treat it, and we need to treat it with actual respect because drawdown will happen. There is no account that doesn't have a drawdown. Now, we need to explain what is an absolute drawdown, relative, maximum, and I will do that as soon as I finish with risk disclaimer. So online educational materials are developed by Admiral Markets Estonia for a global audience. So take into consideration that information in this session is not suitable for everyone. Admiral Markets UK Ltd takes no responsibility for the information accuracy. This is solely my opinion and in no way to present the actual suggestion for a trade. So these are not MUK's opinions, and the video is not from the .co.uk website but the globalnews.com website. This webinar is for informational and educational purposes only. We're accepting this risk disclaimer. You're also proceeding further with me. So today's agenda will be drawdown, types of drawdown, and how to deal with it. So first, we need to explain what is a drawdown. Well, simply put, drawdown is a reduction of your capital. So it will happen after a series of losses. The thing is that it usually takes a long time to get back into the profit if drawdown is big. But also have in mind that you can get back into the profit if you gamble, of course. Now, we will not talk about gamble, and I don't want to actually tell you that you can always over leverage your position and try to get out of drawdown. We know that it's possible, right? So we're not talking about possibilities which are actually at the scope of gambling. So we need to mention things that are actually manageable by still being profitable and within the margin of your risk, normal risk. So first of all, we have relative drawdown, then we have absolute drawdown, and finally we have a maximal drawdown. So those are three types of drawdown that your account statement will show, guys. Okay, don't forget. So that is what your account statement will show. If you go to your account, right click it, then you can print out a statement and you can actually see these three types of drawdown. Now, leverage ratio is usually based on the notional value of the contract that is usually a domestic currency. So that being said, we can assume that leverage has a big factor in actually both drawdown and managing drawdown. And that is the truth. Because if you get in a bigger leverage with a single trade, you can actually make your drawdown, you can delete your negative drawdown in a mere hour. Literally, you can get out of 20-30% in an hour. But that yields actually another risk, that you will be margin called. You need to think about leverage and margin. So drawdown is first and foremost example is the absolute drawdown. Now the absolute drawdown is the difference between the initial deposit and the smallest value of the equity. It means and it tells us how much below the initial deposit level the participant's equity has ever fallen. So that is an absolute drawdown. And the formula for absolute drawdown is initial deposit minus minimal balance. That is how we calculate absolute drawdown. Maximal drawdown is the maximal difference between one of the local maximums and the subsequent minimum of the equity. So maximal drawdown equals to maximum of, then maximum peak minus next minimal peak. So this is the formula for maximal drawdown. And relative drawdown is a ratio between the maximal drawdown and the value of the corresponding local maximum of the equity. That coefficient will show losses in percent of equity that is usually experienced by an expert advisor. And in MT4, relative drawdown is calculated as a percentage of the difference of the historical equity high and equity low against the equity high. Now, this might be a little bit confusing to you, but I will use two of my accounts today that I have prepared for you. The first one is actually good looking account, and of course you know that I have several accounts, and one of those accounts currently is not that good looking. Now this is longer term account. This is 2-year account statement. This snapshot is taken from the account statement, and actually it's a 2-year-old, and this account is 50% up. So you can see it's a, well, it's not that high account, but it's actually one of those medium accounts that I work on. I started with 15,000 and now we have like 23, right? So my profit for this account is like 8,000-9,000. Very, very conservative trading. Also managing drawdown. I will show you how I manage drawdowns. And actually you can see that this 2-year account is at the peak now. So this is the maximum. So you can see actually the upward spiral. Now what I usually do, guys, when I you know, people are usually sending different statements to me, both demo trading, real trading, for me to analyze. And what I usually do is I put it on my screen and I try to compare it to price action. So here this account actually has some patterns in it. Here you can see W pattern, okay, bullish pattern. Here you can see V-shaped reversal. Here you can see inverted head and shoulders. Here you can see leaned W. This is head and shoulders. This is W from the bottom, Adam and Adam pattern. This is Adam and Adam pattern. And here V-shaped reversal. So guys, you see, I'm so into trading and I really love to educate people about this, that I really want to show you how I compare these different statements. And here on my statement you can see that it has more bullish patterns. It sounds fun, guys, right? Because this is not price action. This is just an account statement that is represented with a line. But we can compare it to price action, and we can actually compare it to lines on our MT4. If you put a line on MT4 chart, you will actually see how it looks like, right guys? So you can always make a line instead of Japanese candles, and it will actually look like your something similar to, let's say, account statement. For example, here you can see this is line chart. Right here you can see a line chart, and I removed Japanese candlesticks, and this is also line chart. So we can, by analyzing the account, we can also make a trend line here, guys. Okay, you see, now this is not very precise trend line because I'm using a free hand tool for drawing, but the thing is you can actually connect the peaks. So what it tells us, it has roughly estimated 1, 2, 3, no, 1, 2, 3, 4, 5, 6, 7. 7 bullish patterns compared to a big head and shoulders that is bearish. So if you now compare 7 to 1, means that this account is really good. And compared to the return of investment, ROI, it doesn't have a big drawdown. It shouldn't have, right? Just by comparing those chart patterns that can be found here. So if you put a trend line below, you can actually see that the account is in a positive loop. So this is an upward account that has a nice trend, and it's showing a nice trend to the upside. Now this is how it looks like, okay? This is how it looks like. Deposit, withdrawal, balance, equity, free margin, and so on. So gross profit for this account was 38,711, and gross loss was 3,426. So this is the maximum how much you made, and this is how much you lost. You always try to use, you always want to see that gross profit is actually higher than a gross loss. And this will give you a total net profit. This is total net profit. Now, absolute drawdown was 1,723. So that was actually the absolute drawdown. Okay. Now, let me get back. What we said about absolute drawdown, that is the difference between the initial deposit and the smallest value of the equity. So that was absolute drawdown. Then here, guys, we have maximal drawdown. Maximal drawdown is what I prefer to see. I always watch maximal drawdown. So for this account, it was like 21%. So that means that it's good, okay? It's not bad. Mostly, I traded my session recap trades that were excellent, 80% of success. Also, I traded with my analysis, but sometimes I actually used different strategies to escape from the drawdown. And that is why short positions show 60% roughly instead of, let's say, 80%. Because I have calculated that my analysis is 80% successful. So why almost 60 and not, let's say, 80? Because I needed to use different strategies to manage drawdown that actually happened here, guys. Okay? Now, I could have gone with a simple set of strategies such as, I don't know, scalping or trading my own trades just as I analyze it, or session recap. But you know that those trades are lower risk trades, right? Because I always say use lower risk, 1% per trade maximum. Don't go more than that. But sometimes when you're in a drawdown, then you need actually to use a little bit of, different risk approach, right? So because of different risk approach, winning total percent of win or short position that I want dropped to 60%, not 80%. But it's still good because, guys, there is also a price action strategy that Chris and I, along with Croatian office, Admiral Markets Croatian office, shared with you. It actually shows a positive account of 100% even if the win versus loss is small. Actually 30% of win, but still the account is positive. So it doesn't matter. I personally prefer to see that my account has like 60% of wins. Really, because guys, this is 2-year account. This is not 2-month-old account. You see 280 trades. This is very good. And 11 consecutive win and 10 losses where I used different risk strategies to avoid it. So this account is positive, but this account is not that positive. This is how I call it, not so good looking account. So here, guys, you can actually see that it is a small account, right? But the initial deposit went down. First, it had a drawdown. Then there is a downward trend. Then there is a range, a rectangle. Usually after the rectangle, there is a spike up. Here, I also expect this account. I just need to actually dedicate my time to trade this account. This is a very small account, but well, I really need to sit down and trade it. So I want this account to be in a positive spiral again. So in order to do that, I need to bring it up above this initial deposit. Okay, here. Now, why this account is looking bad? Or let's say not so good? Because first of all, it started to drop. Then we had a good spike, a recovery of the account. And then, watch this, in a single trade, it went down again. So what does it tell you? This is telling you that I have actually tried to use a higher risk to manage drawdown. After this V-shaped reversal, I used high risk. And the biggest mistake, what I did, I forgot to put stop loss, guys. That was my biggest mistake. Because, you know, I'm very, very busy. And I have my couple of different accounts that I need to manage, and I totally forgot about placing a stop loss. And what happened? With that high of a risk, the account dropped again. So what I need to do is actually dedicate my time to trading this account, and then it should go up again. So you see, again, guys, I am profitable if you watch how many of these positions were actually winning positions. Because 51% of short, 49, you see. So it's still positive if you watch this. But the problem is, guys, this. I need to manage this. This needs to go up. So we need to add a little bit of money. I don't want to add 1,000 euros or dollars for this because it's not needed. What I need to do is add like 350, and I will try to manage it back on winning tracks. And don't worry, I will keep you updated how I'm doing, because this is also now for me another I can say try on this account. And this is a good way to show all people who actually lose that even losers can be managed. Not by making big deposit, guys. You don't need to place now 5,000 and say, now this account is okay. No, you don't need to do that. You need to start slowly with recovery. So that is what I will do with this account. So I will dedicate my time to trading this account, and I want this to be positive like this. So when I actually manage to make it like a break even, when I managed to cover all the losses, I forgot to put stop loss with a bigger risk, and this was it. So I will manage this. I will try to manage this, and I'm sure that I will be able to do that. But let's see. So how to manage drawdowns? Now you have seen both of my good looking account and the account that is not so good looking. So more important thing is that this account is 2-year-old account, guys. What it tells you, that my approach with this account is totally professional. With this account, it was professional until this point. We have never ever you should never ever let yourself forget about placing a stop loss, especially if you're doing with a high risk. So this is what I'm going to do. I will bring it up. So I really am looking forward to it. So how to manage drawdowns? Keep the initial trade lower. That is what I usually do. So first, keep the initial trade lower. Don't forget that institutional trading is different than retail trading. I have shown you 2 of my retail accounts, but don't forget that I also had an institutional account where money was almost 10 times bigger than this medium account that I showed you. So for institutional accounts, some people say you can go with high risk. In my opinion, it's something in between. Especially if you're working with other people's money, it's not grateful business, and I don't do it anymore. The thing is that some people are not happy with 2 or 3% per month, and they want 10% of month, and then they start to withdraw the money. So I don't do that, and I'm not happy with it, because my politics was always to trade the account as I trade my own account with low risk, right? So how to manage drawdown? First, keep the initial trade lower and keep it daily risk maximum. Let's say that your daily risk is like 3%, okay? Let's keep it like 3%. Now, what it means is actually that your first trade that you initiate is in between 0.5 and 1%. That way you can add if you lose. But I don't necessarily refer to, of course, reverse trading, but actually that your second trade that is technically justified with your system and fundamentals, whatever, is 2%. So if you lost your first trade, let's say for 20 pips, it will take only 10 pips for, let's say, roughly 10 pips for second trade to be successful and to put the account in a small profit or break even. If you lose, your risk will still be the same, 3%. So think of it. That is my favorite way of doing that. So I usually start low with a lower risk, and then if I lose, I can add a little bit. Okay, like my second trade is 2%. Because if I'm 80% successful, it means that the chances that my second trade after a losing trade will be a success. So if you lose, your risk will still be 3%. Another way to manage a drawdown is to hedge. So open trades in pairs with high negative correlation. For that you need to use, I will show that, correlation matrix. That is the best tool for me, best correlation tool on the internet. You can use it by downloading Admiral Market Supreme Edition. Or you can use grid trading, where you will actually start with smaller initial positions. So you can keep buying, selling at better prices until your margin runs out. Hopefully you only need a small retracement to get out at break even. That is called grid trading. So start with smaller initial position. Let's say that the price is going down, so you shorted it, and suddenly it starts to reverse. So if your first trade, as I have explained here, is smaller, then you can actually add positions if they retrace. Now, something similar we do with our session recaps. When I say, guys, it's good to actually scale in, this is a form, grid trading is a form of scaling in. The only difference is that it can be done, some people do it until their margin runs out. So it's different, because when I scale in, I always teach you to do it with a stop loss. Okay, so that is a big difference between standard grid trading and the way how I trade. So if you keep, let's say on this example, selling at better prices, you need to have bigger margin, because standard grid trading tells you that you're scaling in with bigger margin, but you should always pay attention and you should not allow your margin to run out. Don't forget that margin is different and it's completely reverse to leverage. So margin is reverse to leverage. I hope that you know that. So sometimes if you really catch that retracement, with grid trading you will be positive, because that sometimes the pairs will not have big retracement, so you don't need to add much, but actually just a small retracement is needed to get you out at break even. Correlation matrix, always try to hedge positions that have negative correlation. Let's say pound yen and euro GBP minus 95. My recommendation is to hedge positions that have like at least plus negative 75. So minus 78 and more. Minus 78, minus 95, minus 91. The best is to use pairs that have like minus 90. The higher the negative correlation, the better. So I don't need to repeat you how this is important, because you can see really with correlation matrix all those negative pairs that you can, negatively correlated pairs that you can actually hedge. Let's say CAD yen with euro GBP, CAD yen with dollar CAD, dollar yen with let's say euro GBP, yeah, minus 74, or this is much better, minus 78 dollar CAD and CAD yen. And you can actually put here all these pairs and watch for negative correlation. Euro dollar with dollar Swissy, of course. So watch that. For intraday to intra-week swing trading, you can use H1 on 500 bars. That is enough for intraday or intra-week swing. Also, guys, you can manage a drawdown simply by hope trading. But for me, I will tell you that the worst enemy of a trader is hope trading. So that means that you remove your stop loss and that you are trading on hope. So that you actually want, and you wait for the price to reverse and get you at least to break even. So hope trading is really the worst enemy, because it can lead to revenge trading once you lose. No stop loss also. Just let the price go negative and pray. Those are things that you can manage drawdown, guys, with. But I don't recommend it. Okay? I don't recommend it. So never ever try to do that. Simply because maybe you will have success in doing it. But next time, guys, maybe you won't be having any success and you will lose. So don't do that. Believe me, listen to me. Another way is so-called ample excess margin. So you can start straddling or averaging at support resistance or retracement levels. Usually you can wait to 50% of retracement and then average down. Also, you can use straddling. Now I will prepare a special webinar just about straddling, so it should be a separate webinar. But let me tell you that straddling is a form of breakout trading where you look to trade both sides of the trade. So this is not what I have come up with. Some traders use this as a strategy to manage their drawdowns. So usually you're looking to trade both sides of trades. Stops are usually 20 pips below and above breakout points, but some strategies tell you that you can go as high as 50 pips. So that is what I will show you in one of our next webinars, how you can straddle. Then you can do so-called slow reboot. So start doing it slowly, step by step. As I say, I can manage the drawdown of my account that is now in a drawdown, but I need to actually use the approach of slow reboot. So I need to use my session recap positions and or very, very low risk trading to manage it. That will take some time. So the best is to use compounding. If you want to use compounding, you need to have a compounding spreadsheet. So let's say that my account is like, we want to start with 300, right? With 10 pips per day, with 3% of risk. Watch this, guys. This is huge. But let's be realistic. Let's be realistic. Let's make it like 1%. Okay, that is much more realistic. Okay, now this is ending balance, of course, after 6 months. You see, and 120 consecutive wins, guys. So the chance is that we will not see any 120 consecutive wins. I mean, it does not need to be a consecutive win, but at the end of the day, you should be positive. Will it be like consecutive winning or some other strategy? It doesn't matter. You need to have 120 positive days. Well, it's not that easy. So let's focus on 20 trades, right? Because it's, I'm always realistic, guys, when it comes to trading. So here with 20 trades, the account can actually, we will make it like, yes, like here. Okay. And watch this. We go actually with, we will go with, okay, like this. Yeah. So 300 is starting balance, and after 20 days, it can go to 2000. So if my account is in a drawdown, it will get positive after 20 days. In order to do that, I need to have 10 positive pips, 3 lots per day or mini lots, $30 if my position is worth $3. So if my position is worth $3, with 10 pips, I will have $30 of profit. So after 20 days, by using compounding, guys, I will get up on and be strong, because it will be much higher than I have invested into. This is what you can do, guys, compounding. This is really a good tool to use. You can use it yourself, and you will see that you will actually just try it on demo first. You can manage it. So for drawdowns, I recommend using compounding, because when you start with 3 lots per day, then you will actually raise this, because your account will go higher. So this is how you can do it, and you can see now this is a bit unrealistic. You need really to have huge luck, but it's possible. Theoretically, guys, it's possible. Theoretically. So for that, actually, you need to be, as I say, very realistic. So try with 30 days, okay? Here, 20 days. And then you will see gradually multiplying your figures can lead you to these numbers. Now, this is so-called slow reboot. Fast reboot is gambling-like. You can try to gamble, also use compounding, but it's compounding with a high risk. So let's say that we want to use high risk. So 10, but we will actually use this with, let's use 5 and 5. Now, guys, this is a little bit more. Now, if you go with $10 per pip, watch this. Watch this, guys. Well, now from 300 to 12,000 in 20 days. Well, watch ending balance. But this is, for me, this is pretty much unrealistic, because to expect this, you should be like a robot with no emotions. So this is virtually impossible. At least for me, I never try to do that. I mean, I have totally professional approach to trading. So for me, this is a bit, I don't know. I didn't manage. I didn't try to do this actually. So for me, it's, as I say, it's a bit unrealistic. But theoretically, you can manage drawdown by fast reboot in a matter of 8 days, right? So it doesn't take a lot of time, but it takes something that we humans are very susceptible to, and those are human emotions. So unless you're totally emotionless, and I presume you're not, it will be hard for you. So you need to keep it realistic. Mislav is asking me, where can I get Excel compounding calculator? Well, just send me an email, Mislav, and I will send it to you. No problems. So guys, I hope that this has cleared some doubts for you, and that you actually know that there are different strategies to actually use. For this account, I have used conservative approach, where actually I didn't hedge, but I actually did this kind of risk management, okay, for this account. So this is what I did. Started with lower trades, and then I added. If I lose my first trade, I still have the chance to win. And because I'm like 80% successful, the account is good. For this one, well, I use a little bit higher strategy, high risk strategy, but the problem is, well, I didn't use stop loss. So you see, it's just different approach. So after all, guys, system trading does not mean anything. It's ultimately human factor, because if 100 different people is trading the same system, all of those 100 people will have different results. That is because of human factor. So also you can, as I say, you can manage drawdown by waiting for 50% of retracement. Price will usually get into 50% of retracement. So you can watch it. And another way that I can show you about trading the account, you see today we had a positive trade on euro dollar. I said that you could go short around 12.40. So is to listen to my analysis. Yeah, I'm kidding, but yes, it can and it should actually help you. But what I was actually trying to tell you is to open 1 hour time frame and try to watch for those Marubozu candles, guys, and try to use different approaches. So if your account is not doing well, try to use, for example, high volatility trading. Watch this, guys. Do you remember high volatility webinars? You can also find it on Price Action Trading School if you're not sure about it. So here, this is a high volatility setup. We want to take trades around 61, 78, 80, and 88.6 retracement while still keeping our stop loss below. So if you use, let's say, high volatility trading setup, Marubozu candle, you should be able to get out of the drawdown, because these are actually high win to lose ratio setups. But you need to be patient, as you know that. So use that, guys. Use those little tips and tricks that I was showing you. So if you don't know about high volatility trading, try to use scalping strategy, guys. I have some good scalping strategies that are based on MACD, momentum, and actually you can find it uploaded there. Also how to scalp with Price Action Trading School. And I have received very good comments for my scalping strategy, really. You can always try different approaches. If scalping is not working, try to go with breakout trading. Breakout trading might be something that you can use to manage the drawdown. Or if anything is not working, try just a simple London breakout system. I also presented it. So there should be a way to manage it. But don't forget that ultimately it will boil down to your risk. So don't go with a high risk. That is my advice. Guys, this is everything that I had for you today. If you have any question to ask, please go ahead and ask me. If you don't have any questions, I hope, as I say, that you made money on euro-dollar analysis today. It went to our POC and straight down towards 1.1188. So I hope that you use the analysis. Okay, I don't see any questions. Ron is saying thanks. Sure, guys, no worries. These are some tips and tricks you can use. And for some of those, we will need special webinars where we will be talking simply about one strategy, like straddling, and for that, I will prepare the special webinar. Thank you, guys, for comments. Thank you for listening to me. As I say, always, cheers and trade safe. I will be here with you soon, and it will happen tomorrow with Chris. So stay safe and talk to you soon. Bye for now.